AMC Entertainment Holdings, AMC, has been one of the most closely watched and volatile meme stocks over the past couple years. The movie theater chain has seen its share price whipsaw wildly based on sentiment from retail investors on platforms like Reddit as well as major corporate actions. The latest significant news came on July 24, when it was reported that a Delaware court blocked AMC's planned conversion of its preferred stock into common stock. This plan had faced opposition from some investors, and the court ruling caused a major rally in AMC's common stock price. In this in-depth analysis, I'll provide context on AMC's current situation, recap the preferred stock conversion plan and why it was controversial, analyze the court ruling blocking it, discuss the stock's price reaction, examine perspectives from retail and institutional investors, and look at what may be next for this meme stock. There's a lot to unpack. I am your AI host, so let's dive in. AMC's challenging circumstances. First, some background on why AMC proposed the preferred stock conversion plan in the first place. AMC Entertainment has been hit hard by the COVID-19 pandemic, which resulted in extended theater closures and reduced capacity. The company burned through a lot of cash just trying to stay afloat when ticket sales dried up. Heading into 2022, AMC had accumulated massive debts exceeding $5 billion and was still burning cash at an alarming rate. While business is recovering in 2022 with blockbuster movie releases bringing audiences back, the company's high debt load and interest expenses remain a huge concern. AMC CEO Adam Aron had telegraphed the need for AMC to shore up its balance sheet by raising new capital. However, AMC's common stock had already seen significant dilution, making further common stock raises unattractive. This set the stage for the preferred equity conversion plan as an alternative. The preferred stock conversion plan. In March 2022, AMC announced a plan to issue a new preferred equity security called AMC Preferred Equity Units, APES. AMC would issue 516 million APES to existing shareholders as a dividend, with the goal of raising $1.2 billion in new capital. Each APE could be converted into one share of AMC common stock, subject to limitations and a 5-year deadline. This plan would shore up AMC's liquidity through the capital raised while deferring the dilutive impact on common shareholders until potential conversion down the road. However, some investors objected to the roundabout approach of issuing preferred shares to enable greater common dilution later. In May 2022, AMC amended the plan to increase the number of APES issued to about 526 million, targeting $1.25 billion in proceeds. Controversy around the plan. The preferred equity plan became controversial among the retail investor community on Reddit and other platforms. Some viewed the APE rollout as an unnecessary step that would hurt existing common shareholders. One major objection was that each APE could convert into one share of common stock in the future, potentially more than doubling the outstanding common share count. Critics argued this approach skirted the need for direct shareholder approval of such dilution. Others disagreed and supported the plan as a creative way to raise capital while rewarding loyal shareholders with the APE dividend. Overall though, objections grew loud enough that AMC felt compelled to revise the plan. In July 2022, AMC proposed an updated plan, continuing the APE issuance but committing not to convert more than 15% of the outstanding common stock into APES within the first year. This addressed concerns about immediate dilution. AMC also promised to seek shareholder approval for any future APE conversions beyond that 15% limit. The lawsuit and court ruling. However, a lawsuit alleging breach of fiduciary duty against AMC from some investors proceeded despite the updated plan. The plaintiffs essentially argued that the APE framework set the stage for excessive share dilution without sufficient shareholder protections. The lawsuit sought to block the updated plan as well, demanding that any issuance of shares that could become common stock must be approved directly by shareholders through new votes. On July 22, the Delaware Court of Chancery denied AMC's request to approve the revised plan. The judge agreed with the plaintiffs that the APE issuance and potential future conversion was structured in a way to circumvent shareholder approval rights. By declining to validate the plan as structured, the ruling forced AMC back to the drawing board. It needs to come up with a new approach to raise capital without running afoul of shareholder rights. AMC stock price reaction. Once news of the court ruling blocking AMC's plan emerged, the company's stock price shot higher in trading on July 25. The stock closed 21% higher on tremendous volume, indicating a surge of buying interest. Much of this buying appeared to be fueled by retail investors on platforms like Reddit. The prevailing sentiment was that nullifying the plan prevented dilution that would hurt existing common shareholders. Without the imminent threat of their ownership stakes being reduced via conversions, investors piled into the stock. In essence, while the court ruling was a setback for AMC management's capital-raising efforts, retail investors saw it as a big win for their interest in the common shares. Hence the relief rally. However, it's worth noting that the APE preferred shares declined in value after the news. The future conversion potential had seemingly been supporting the value of these preferred shares. With that conversion path blocked for now, the market reassessed APEs as less attractive. Perspectives on the ruling. Stepping back, opinions vary on whether blocking the preferred conversion plan was a good outcome. Many retail investors cheered the ruling, happy to avoid potential near-term dilution. However, the ruling leaves AMC still in need of new capital and without an immediate path to raise it. Some analysts think trying to limit share issuances actually makes it harder for AMC to strengthen its balance sheet. Without flexibility to quickly raise capital when needed, the company's long-term viability could be harmed. On the other hand, those in favor of the ruling argue it forces AMC to be more transparent and deliberate with shareholders if it does ultimately need to pursue dilution. Rather than circumventing shareholders through complex preferred share mechanisms, the company has to make its case for additional equity directly. The court's objective was not necessarily to pass judgment on whether issuing more shares was good or bad for AMC. Rather, it asserted that proper shareholder rights and approval processes couldn't be ignored. For management, the ruling means going back to the drawing board to find an equitable path forward to raise capital while maintaining shareholder alignment. That likely requires having direct conversations with investors on the rationale for issuing more shares if it proves necessary. Broader impacts. Beyond just AMC, the court decision here could influence how other companies approach capital raising, especially those with an influential retail shareholder base. The reminder that management can't unilaterally dilute common stock without shareholder input, even through complex preferred share deals, will resonate through corporate boardrooms. This ruling also reinforced that companies with a sizable retail investor following need to be especially careful and transparent with shareholders. While retail investors don't always grasp the nuances of capital structure decisions, disregarding their concerns or shareholder rights can incite backlash. For the meme stock crowd more broadly, the court blocking AMC's plan feeds into the narrative of retail investors winning against Wall Street establishments. Whether justified or not, the ruling bolsters the perception of loyal individual shareholders overcoming a corporation's plans. The aftermath for AMC. Looking ahead, several questions remain in the wake of the blocked preferred equity conversion plan. How will AMC raise necessary capital going forward? Options may include a traditional common stock offering, issuing new debt, or pursuing an alternative preferred share structure. AMC needs to move quickly to shore up its cash position. Will retail investor enthusiasm for the stock last? The rally following the ruling carried the stock price higher, but underlying business challenges remain. Long-term fundamentals still look uncertain. Could bondholders take a tougher stance? With equity dilution off the table for now, debt holders may push for remedies or concessions as AMC's leverage situation remains uneasy. Is bankruptcy risk increasing? If AMC's cash burn continues and no capital infusion materializes, its viability could be threatened without a massive turnaround in core operations. Is acquisition interest in AMC still alive? Some rumors have suggested companies like Amazon could pursue an AMC acquisition. But with its share price volatile and financial position strained, AMC seems a less attractive M&A target. What's next for the APE preferred shares? The market for these shares seems uncertain now that the conversion element has been delayed indefinitely. Their ultimate value depends on whether conversion to common shares eventually occurs. Overall, while the ruling may have pleased retail investors, AMC still faces an uncertain road ahead. Raising capital is imperative, but dilution also feels inevitable at some point. How management navigates this dilemma in cooperation with shareholders will determine if AMC's comeback story has a happy ending or not. Conclusion. In summary, the Delaware court's decision to block AMC's preferred equity conversion plan sets up a pivotal moment in the company's recent drama-filled history. While a victory for shareholder rights, the ruling leaves AMC's desperate need for new capital unresolved. Looking ahead, AMC must go back to the drawing board and have frank conversations with investors if issuing new shares becomes necessary for its survival. Meanwhile, the meme stock crowd appears energized by the ruling, even as fundamental business headwinds remain. AMC still has a difficult balancing act ahead in charting a path forward. This saga underscores the complex dynamics when a company beholden to retail investors faces existential business challenges. AMC's management team has hordes of vocal individual shareholders to answer to amid strategic twists and turns. That creates opportunities for engagement but also pitfalls if management is seen as infringing on shareholder rights. Regardless of what happens next, the court's rebuke of AMC's plan resurfaced the debate on how companies can raise funds efficiently versus treating shareholders equitably. Other corporations are watching closely as this balancing act continues playing out in the meme stock spotlight.